Supply chain constraints are blamed for high prices for goods coming from abroad. How does raising interest rates help to resolve supply chain issues and lower prices of goods?
That's a great question.
Yeah.
You should talk to the government about that.
Yeah.
It doesn't.
Yeah. I guess in one way it kind of weirdly could, in that it decreases demand. Mm-hmm. So like the supply chains could kind of balance out because higher interest rates is like, decreasing demand, but that's exactly what the government doesn't want to do. They don't want to decrease demand. They don't want to shrink the economy, which then shrinks their tax receipts. So they have less revenue. So I guess in strange way, possibly could, but it's going to do it for all the wrong reasons. It reduces
the demand for the supply chain.
Yeah, but it doesn't fix so many other problems, like the actual supply chain, the way things are structured throughout the globe. It doesn't fix any of that.
No,
that's the smart question to be asking, and I just don't think people are asking that. Like most conversations that I see people having, and maybe it's because we're in real estate, so I don't know this, but I feel like this is true, that when people talk about interest rates right now, they're making it about the real estate market. And again, this is probably because we're in real estate. I'm more sensitive to those types of topics, and I just feel like asking people, I'm like, well, like, don't you realize that these interest rates, they don't happen in a silo, right? They don't just happen in this bubble, and it just impacts real estate markets. It kind of impacts everything. So this thing about interest rates and people looking at housing prices, and that's why they're doing it. I'm like, there's all this other stuff going on. And to Tom's point, if they raise the rates and they reduce demand, and maybe it helps with supply chains a bit, right? Like, because the demand drops a little bit, but the spillover, the ripple effect of that can be so large, because now all of a sudden we could have a shrinking economy, right? The last quarter was already negative growth in the US already. So it's just like, it doesn't fully make sense. And I feel like there's not enough conversation around it from this angle about looking at a larger picture.
How it affects the whole economy.
Yeah, that's the thing, because there's more things to be done. My hope with this whole COVID thing was that when it came to interest rates, when it came to supply chains, I thought, I'm like, you know what, if one good thing could come from all this kind of COVID rules and lockdowns, all like whatever angle of it you want to talk about, I just thought maybe they realized that the supply chains have to be fixed, and we need to do things more here in Canada. We need to start manufacturing things. Mm-hmm. We have raw materials. Let's use these raw materials.
Some politicians have started speaking that way.
Some, yeah. But I don't see this kind of movement towards that. And there's costs involved because of it and stuff like that. But I just feel like that's not happening, and we're going to have the same kind of ongoing problems. And now with more politics going on in the world, geopolitics between countries, the supply chains get even shakier.
Mm-hmm. Remember when didn't we have a VIP talk a while ago about the fourth turning? Mm-hmm. Like, it feels like we're in the middle of it now. Like, this is it. Like, we are in the middle of the economic chaos where institutions are no longer have belief. The masses or the general populations lose faith in the institutions, government, media. Like, it's all happening right now. We're in the middle of it, where the old systems all crumble and new systems emerge. And there's positivity that comes from this, but there's going to be like volatile times ahead. And just to answer the next question that came in from the same person there, is TD and BMO forecasting 10 to 20% decline in real estate by December 2022, I would imagine. Do you agree, and why? Anything's possible, sure. If they raise interest, they're going to raise interest rates likely another 0.5 point in June. We'll see if they do another one in July or not, or if that just breaks the world at that moment. But yeah, it's absolutely possible. And when you think of it, off what price are we talking about a 10 or 20% decline? Property prices in the last 18 months are up like 30% or whatever it is. So if it's coming off of that price, sure, like, it's absolutely possible. Why wouldn't it be possible? Mm-hmm. Prices are in Canadian dollars. The real estate never changes. The real estate is what it is. The price is a reflection of the amount of M2 or money in the system, which is often dictated by the interest rate policy. So yeah, it could absolutely happen. I mean, it's so tough to call that.
Yeah. Okay. We'll take another live question. John.
For the record on prices, sorry, just to add one more thing, is the prices, if they went down, let's say, I actually knew the number, but if it went down about 15%, I believe, they go back about 3 months from where the peak was. So it's back to November, December of last year, depending on area and type of property and that type of thing. So in that case, let's say we get to the end of this year and prices are down. We'll go 15%. He said 10 to 20. Let's say they're down 15%. We're now in a situation that in 1 year, there has been no price increase, because we're now back to where things were at the end of 2021. So now we're at the end of 2022. Mm-hmm. Prices have come down And so that means there's just been no growth for 1 year. But the years prior, there's still been substantial growth. So this whole thing about prices coming down, and I'm not sure where he's coming from, but a lot of investors are like, they fear that. I wouldn't fear that. That's good. Prices have overshot where they should be. We want them to settle down, and then what has happened based on like past history many times is then they start this kind of ascent to where the kind of, I want to say fundamentals, but it's not really fundamentals. It's more where Tom's talking about with like, the percentage of money in the system, right? Because when it happened at other times, there was less money in the system. So the growth had been slower, but with more and more money entering the system, as that trend has continued over the years, the growth in price has increased. Right. But then when it overshoots because the money hasn't kept up, then it comes back down, and then it'll go on that trend, which is still a very strong trend line because it's keeping up with where the M2 is. So that's where prices are. The one thing that I've tried to kind of explain this in a chart before, or it's just in my head.
You've obviously done very poorly.
I haven't found a good way to explain it because I haven't tried to do it yet. Is that if you have, if all the money in the world is, call it like just whatever, $100 trillion. And the real estate component of all the money is $10 trillion. And then all the money in the world goes from 100 trillion to 50 trillion. The real estate can go from 10 to 5. Mm-hmm. So the prices can drop, but they're still holding the same value of the money that's in the system. Mm-hmm. And I think that's what is the most important thing to look at.
Yeah, most Canadians associate their wealth with the dollar value of their assets. Nick and I don't do that. We associate our wealth with the assets that we own. Mm-hmm. Like, it's such a different way to look at it. Most people look at the Canadian dollar value of their assets, and that's how they associate or kind of like apply or think about their wealth. We just think about the assets that we own. And then people can dismiss my comment because they're saying, well, Tom, I took out a mortgage on the property. If the property drops in half, it kind of sucks, right? Because I bought it for $1 million. I have a mortgage for $1 million. Now it's worth 500,000. Yeah, no doubt. You have to buy the property for the right reasons. The rent's the right thing. But even in that case, as rents don't change, you're going to likely survive through that if you bought the property for the right reasons in the right area.
Yeah.
Like, it's not that big of a deal. And I know when I say that, people just get very defensive. They're like, what the hell are you talking about? The price is very important. But I'm like, no, you want more assets in your life. The thing that's manipulated in the economy isn't the real estate, to Nick's point. It's the dollars. The dollars are the thing that's manipulated. Mm-hmm. The real estate is what it is. You either build these homes with brick and wood or you don't. They can't be printed. The Canadian government can't solve our real estate crisis by printing more homes. Like, they can't go from Ottawa and say, hey, we're just going to print 10 million new homes. They can't do it. They can just print more dollars.
They say they can.
Yeah, but the Canadian dollar price of the home is manipulated because of the printing of the dollars.
I think your point there about for the right reasons, right area, yes, but also for the right reasons. So if you're buying a property because you're just like, oh, I'm going to buy this property, I'm going to sit on it for 6 months and I'm going to sell it and it's going to be worth more. Mm-hmm. Okay, yeah, then it's a real problem. But if you're like, hey, I want this asset, to Tom's point, and I'm going to hold this for the long term.
For 20 years.
Yeah, for the long term.
And it's going to create income for me. And I'm buying it based on the income that it creates.
Exactly.
That's the value. That's where things change.
It's a business. Yeah. Your income-based property is a business. So you should be looking at the income and the expenses. What are the threats to that? Can the income change? Can the interest rates on the borrowed money to buy it change? Those are your threats. Mm-hmm. But the way you're looking at it is the income and the expenses.
Yeah.
Whereas most Canadians just look at the price. Yeah. I'm like, that's such a silly way to look at your real estate.
I've heard you say before too, like the value in the economy is the goods and services in the economy. It's not the money that you use to buy.
No, especially not in our current system. The money is an intermediary. I want something, you want something from me.
Yeah.
But I don't want what you have. So money acts as this middle thing. But the current money that we have between us, between the goods and services that we might want to exchange, is so manipulated.
Yeah, it's not a store of value. It's just that medium of exchange now.
Yeah. Someone I saw recently said, well, real estate's not good as an investment because the price changes so much. Like, it's so volatile. I'm like, no, you don't get it. The real estate's not changing. Yeah. It's the amount of dollars in the system that's being manipulated that changes the amount of dollars required to buy my real estate. My real estate isn't changing.
Yeah.
But it's kind of a different way of thinking.